Good morning, everybody. This is Patrick with the Equity Management Academy. Um, Today, I have a special review that I would like to share with you live here on the trading room, where we're going to take a look at JNUG, JNUG, as an instrument that is offering what I believe to be some unusual profit opportunities. And we're looking at the daily chart for JNUG, which is the Direction Shares Trust $JNUG Gold Miners Bull ETF, which is leveraged 3 times the ETF. So if JNUG, if gold moves up, basically the ETF pays you 3 times the price of the gold miners ETF, GDXJ. Whatever the percentage move of the fund, the ETF, this ETF will pay you 3 times the volatility. So if it moves up 10% on the basic fund, then you're looking at JNUG paying you 30%. And likewise, the volatility is 3 times the volatility of the underlying product. So for the aggressive trader that wants to build equity aggressively, I think this is an excellent opportunity to do so without the risk of running a margin call, so to speak, or putting up margin as you would have to put up if you trade in the futures contract. And so we're going to take a look at basically what this is telling us here, and we can see going back to December 23rd of last year, we made a low of about 1280, and we saw a rally ensue all the way up to about 43.14 as of March 14 of 2014 at 43.14. Then we went back into a correction again until about the end of May, early June of 2014, where we experienced another rally that took us back up once again to around July the 10th, around the 36 level. But what we can clearly see here is that, first of all, we have made a major bottom here, it seems, in the 12 to 13 area, and the upper end of the channel basically seems to be in the 43 area. If we go back to the other high of October 28, then we're looking at the average of about 42.87, 43 on the top end of it. So we seem to have established a long-term uptrend, and what we're going to see is basically where the market is going on its own basis, on its own technical basis, using the different components that we use to trade our own account here at the Equity Management Academy, and applying the VC price momentum indicator. These are all the components basically that we use. So let's put into place and see basically what the Fibonacci retracements look like from the low that we made at the end of May, early June, to the recent high that we saw here in July. We basically were able to identify the correction percentages using the Fibonacci retracements, which generally identifies for us critical points of support and objectives on a correction once we have seen a breakout point take place or a defined move identified. Usually we, as a standard conventional wisdom, we correct to a potential of about 61.8%, which you see right here. And from this level, we basically have experienced almost 3 corrections into this price range. One back in July 24th with a low of 2268. One on August the 5th with a low of 2115, and recently on the 25th here again we experienced a low of 2185. The 61.8% retracement, or golden ratio as most people would like to call it, was 2191, excuse me, where generally the majority of the times markets will react from here, and it will establish what Elliott wave analysts call the completion of the second leg or the second wave correction. And we use this ourselves to identify our own patterns of wave counting, and pretty much it appears that the market has confirmed this completion at these levels here of the 61.8% Fibonacci correction. Our indicator, our proprietary indicator, which we use, the RSI that was created by EMA using our own parameters and algorithms, identify for us a major bottom to take place on the 25th. In fact, we are experiencing a rally from those levels as we speak. Now, let's see what else we can identify by basically looking at some Fibonacci fans as levels of support and resistance from the high that we made of 43.14 on March 14th to the recent low that we made in early June, from the low of basically 1409. What you will notice here is that this particular ETF has a tremendous range to trade, from 43.14 back in just March, this past March 14th, all the way down to the end of June to a low that we saw basically of 1332. That's a pretty nice move, and it tells us that this is a very, very volatile trading ETF that, if we can time it correctly, can produce for you some phenomenal results. The previous rally went from 1280 in December, from the low of December, to 43.14 at the high just in March. From 1280 to 43.14. This is a phenomenal return. Obviously, we can see here that you need to take some measures, protective measures, hedging measures, when appropriate levels seem to indicate the possibility of a top formation taking place. And since this stock trades pretty much in a 30-point range. That's a $30 range on a, per share that you're talking about. That's an incredible percentage move. And if we analyze just going back from here, from the end of May, early June, from a low of 1324, we got up to 36 as of July the 10th. This took place from the pretty much the end of May to July the 10th. That's about a 90-day or 45-degree Gann angle correction. And what we have seen from July to where we are right now is a completion of this correction here, and that's what this market seems to indicate for us. That it is particularly experiencing the level of support that was anticipated on the golden ratio, 61.8%. Even though the lower level, the maximum level would be 1806 on JNUG as the 78.6% maximum retracement. So far, it appears that the golden ratio has identified this low, and now this is the third day that we're moving up in a row, up another 5.5% so far as we speak. Now, let's see if we can identify the targets, if in fact the high was made in July the 10th to the recent low that we saw here on the 25th. And let's do a little bit of a Fibonacci retracement from those levels and see what we can anticipate. This is the high of July to the low here that we made on the 25th. This gives us for us now the objectives that are possible here based on the high that we made in July and the recent low that we made here. From the high basically being about 36 to the recent low that we saw here of about 2179. The first target, basically, we're looking at about 2516, and we look to rally all the way up to about 33 to 36. A close above 33 would basically confirm the target of 36, and a break at about 36 puts us into about 44, 45 area. Let's get some more confirmation of this target here and see what using Andrew's pitchfork analysis is able to confirm in terms of the line balance of the markets by taking the low once again back in December. That seems to be the major bottom taking place, to the high that we saw in March of this 314, and the low that we saw here in May of this year. The March of this year to the low of this year, that gives us the pitchfork levels of resistance and support. And this confirms for us that a close above 2550 would basically validate the rally that we're looking for all the way up to about the 44 area, which is the medium line of balance of Andrew's pitchfork. So I think that the 44 area, 44, 45 area is a high probability target zone that we're going to accomplish. Now, let's try to see in what time frame potentially this could take place by using cyclical analysis. And for that, let's use basically what we have here is the Fibonacci time ratios. By using the recent high that we saw this March of 43.14 to the recent low that we saw here towards the end of May. And we get pretty much in alignment. Let me redo this here a little better. I'm trying to get the exact point for the Fibonacci extensions here. No, that's not the one. Let's try this one here. From the high that we saw here in March to the low here. Okay. What this does is it allows us, and it gives us a window of time that we can expect this lows and highs to come in. And we see here that the next time frame is 9/24, September 24. And this coincides with our cyclical analysis that we should ensue a rally for the next 30 days. And this confirms that the potential target that we could see unfold here of the medium line of the line of balance that we're looking at is in this vicinity, and the time frame is by September 24th. So what this analysis is saying to us basically is that the next time frame to be expected is 9/24, and from what we're getting here is that this market potentially is making a bottom here, and we could be looking at a top objective of about 48 on the upper end of the zone, and between 36 to certainly 44, 45 in that vicinity if the market does break out. So these are, I believe, are pretty strong analysis for us, and now what we want to do is simply wait for the price action to confirm and validate these codes that we have been able to identify in order to use this and maximize our profit potential, aggressively building equity by using the JNUG ETF